If you never rebalance your portfolio, you are slowly changing your plan without even realizing it. You might think you are still following the original plan, but the market has other ideas. And if only it had ideas, it acts.
You have my undivided attention.
Hi, I'm Mike, and on this channel I'm showing you how a regular person with a really boring strategy beats S&P 500 index. After watching this video, you will know what rebalancing is, why you need to do it, and what happens if you don't. Let's go. Let's start simple. Rebalancing is not an attempt to predict the market. It's not about guessing tops or bottoms, it is about regaining control. You decide what your portfolio should look like, and from time to time you need to make sure of it. That's it. But why do you actually need to do it if you don't touch your portfolio? Let's look at a very common setup. Imagine an investor following the classic advice: buy the index.
Just buy an index fund and never look at a headline, never think about stocks anymore.
So let's say 80% in VFV, as Warren Buffett says, 15% in semiconductor ETFs, because chips, and 5% in a single stock. Palantir, of course. Sounds reasonable, right? But 1 year later, without adding or selling anything, those proportions are no longer the same. One part grew faster, others grew too, just not as fast. The investor didn't touch the portfolio thinking they are keeping to the strategy, but in fact they don't, and the portfolio now is more risky than it was initially planned. Now let's consider a more diversified investor, one that follows 3 ETF strategy that I initially have chosen for myself. I have adjusted it later with international ETFs, check out this video, but for now let's stick to 3 ETFs. VFV for S&P 500 index, ZNQ for tech stocks, and VDY for dividends and Canadian exposure. Originally perfectly balanced, roughly 1/3 each. No fast growers, no hype stocks. What can possibly go wrong? Fast forward 1 year, the allocation is no longer 33% each. One ETF now takes a noticeably bigger share. And again, nothing was done wrong. No bad ETFs, no bad decisions. The investor didn't change the strategy. The market did it. And this is just 1 year. Now imagine 5 or 10 or even more. Here is the uncomfortable part. If you do nothing, your portfolio slowly becomes more risky, and you might not even notice it. Your allocation drifts, your exposure changes, your original strategy fades away. Doing nothing is still a decision, just not the conscious one. This is where it gets interesting. When you rebalance, you are not trying to predict anything. You are simply doing one thing everyone talks about but rarely does. You sell what has grown more than planned, and you buy what is low at the moment. Buy low, sell high. Not as a slogan, as a mechanical outcome of discipline. Now, a very important Canadian detail. In TFSA and RRSP, rebalancing is tax efficient. But in a non-registered account, when you sell higher than you bought, there is capital gain, and it is taxed. One more thing about TFSA. Rebalancing is fine, but doing it too frequently might look like trading, and CRA doesn't really like trading in TFSA. But I do not recommend rebalancing every day, week, even every month. To me, is too often. So the next logical question: when to rebalance? There are actually 2 approaches. First, by schedule. So you choose the schedule, whether it's once a quarter, once a year, doesn't really matter as long as you stick to the plan and you just do it. Second, by threshold. When allocation drifts, say 2 to 3%, you do it. There is no universal right number, just the one you can stick to. Personally, I rebalance in a much simpler way. I invest regularly, and every time new money comes in, it always goes where it's needed to maintain the balance. That's it. So my portfolio rebalances itself. All I do is always buy what is low at the moment. No selling, no timing, no stress. Of course, one day I'll reach the point when $130 a week, which is slightly over $500 a month, is not gonna be enough to rebalance this way. That's gonna be a really nice problem to have. Rebalancing is not about being smart. It's about staying aligned with the plan you have already chosen and letting time, not emotions, do the heavy lifting. If you like this video, you know what to do. And check out other videos. And let's build our financial future together, one little step at a time. See you in the next one.